Hi guys. Today we will analyze Bank of America stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The short-term trend is negative, the long-term trend is neutral. Not much exciting going on here. Support level is around $43. Resistance level is around $49.20. In the last month the stock has been trading between $42 and $50, which is a wide range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 53 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Valuing financial institutions. Understanding why financial institutions are different from traditional real sector companies is key. Banks function differently than traditional cash flow-driven companies. Traditional companies create products to make money. The products of banks are money. Banks are highly levered and they do not reinvest debt in the business and instead use it to create more money. They make money via interest. So, they view debt and interest differently. That's why, our favorite discounted cash flow valuation method doesn't work for banks and insurance companies. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average PE ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $52.34. When we apply the margin of safety to that value, the fair value of the stock would be $36.64. That's the price that I want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Bank of America is 3.56. Minimum rate of return. I will use 12%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Bank of America, analysts forecast growth rate around 23.89% per year in next 5 years, and future PE around 14. I will use three different scenarios for Bank of America company: bad, average, and good. First scenario. Bank of America will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future PE would be low, 12. In this case, the fair value of the stock today would be $22. Second scenario. Bank of America will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 14. In this case, the fair value of the stock today would be $30. Third scenario. Bank of America will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 16. In this case, the fair value of the stock today would be $41. As you can see, today the stock is overvalued, $45, even if we expect Bank of America's high performance in future. The fundamentals are good. But the stock is a bit overpriced. I don't own this stock, but I would be happy to buy it when it drops below $38. Company's strengths. Bank of America is one of the largest financial companies in the world. The company is primarily a U.S. retail and commercial bank, with a network of more than 4,000 branches across much of the country. Bank of America is the country's largest mortgage company as well. Management continues to focus on responsible growth. It's the company's ability to expand its loan portfolio without taking on too much credit risk, and to maintain balanced growth across segments so that more volatile businesses, such as trading and investment banking, do not account for an outsized portion of profits. Profit margin of 35% is amongst the best of the industry. 2021 fourth quarter results showed strong organic growth, record levels of digital engagement, and an improving economy. Risks. Bank of America is the nation's largest credit card lender. As such, trends in consumer interest rates, employment, income growth and borrowing patterns represent a significant risk to the company's earnings. Among economic risks are high inflation rates, the spread of variants like the recent Omicron strain, climate change, and supply constraints. Consumer credit controversies affected the brand image. Changing government regulations and financial crises like recessions. Competition from other banks can reduce Bank of America's market share. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.